You renewed your push again today for greater transparency in the derivative business, greater oversight of these markets. And, of course, this is still a question in Congress. They haven't decided yet exactly how to move. What is the risk if Congress does nothing here?
Well, I think the risk to the American public is what we saw again 15 months ago. These risks in these markets are supposed to be lessened for the public, but unfortunately they were concentrated and heightened. So we must move forward promoting transparency and lowering risk.
You're here in New York. You worked on Wall Street yourself 18 years at Goldman Sachs, and you even pointed out in your speech today a lot of big banks here in New York don't like exactly what you're talking about here. This is going to hurt these banks and their profits, would it not?
Well, but we're trying to do something for the American public. We're trying to lower the risk and lower the cost to all the consumers, because every corporation that hedges right now has an information deficit. They can't see these markets the way they need to see these markets. And so that's what we're fighting for.
Do derivatives right now, over-the-counter derivatives, we saw what happened with credit default swaps and AIG, do they pose a systemic risk to the system right now?
Well, derivatives, unfortunately, are concentrating risk. And it's also very few large derivative dealers. They were, here in the U.S., they were all TARP recipients, as we recall, who concentrate this risk. We're trying to lower that risk.
All right, and what's your sense right now about what's happening on Capitol? We had the House pass legislation. You pushed again to make sure as many of these contracts move to are processed through clearinghouses, move over regulated exchanges, yet Congress, lawmakers say, listen, there should be exemptions here. You pushed against some of those exemptions. Does the House bill go far enough?
Well, I'm going to keep making the case. We live in a great country where Congress gets to decide these things, but I'm going to keep making the case that we've got to bring all products that are standard enough to the transparent trading venues, just as we have in the securities markets, just as we have in the futures markets. We ought to see this pricing on a real-time basis.
Does the House bill do that?
Well, the House bill has that principle, but they do have exceptions, and I think we have to narrow those exceptions and, where possible, actually not have exceptions for the trading of derivatives.
How hard are you going to push the Senate to try and take it that direction? Senator Dodd, of course, we heard today that he's going to be stepping down at the end of the year, not running for re-election. Are you optimistic he's on the same page as you on this issue?
Well, a very good relationship with the chairman and have great admiration for him, and I look forward to working with him and the rest of the Senate. This will also go in front of the Senate Agriculture Committee and Chairman Lincoln and her committee, working to get the strongest bill we can.
Any thoughts on Senator Dodd's retiring?
I, of course, wish him and his wife and his lovely daughters well, but I'm looking forward to working with him right now because he's still there, and that's really important to get this bill through. All
right, let me ask you one final question. Position limits on energy traders, another issue. It's been a hot topic at the Commission. You had these hearings over the summer. A lot of people thought this would come at the end of last year. Where does that stand right now?
Well, we're taking a very serious look at it, I think, as we should. We have position limits in other markets. We, in fact, had them in this market to help protect the markets against concentrated, outsized positions.
Something soon this month?
Peter, I'm not making any announcement here today.
All right. Chairman Gary Gensler of the Commodity Futures Trading Commission making the trip here to New York.